We need to talk about last night. You called me naked in the cold light. Loving with another, I was lonely. Getting on it to get over the way you played me. Two wrongs don't make a right. I only did it cause you did it to me July. It's the first time, it'll be the last time. Oh, don't lie. We are a fire in the sun. I ain't here without you. So tell me what we're gonna do. We could forgive and forget. So I ain't here without you. So tell me what we're gonna do. If you give me another chance, I swear I'll love you for life. If you give me another chance, baby, I don't wanna give up the fight. If you give me another chance, it'll be like diamonds in the night. If you give me another chance tonight.
On a VHS, and my dogs at like 3 a.m. In past times we ain't seen paychecks, but we was deep in the shit way less. Now I'm feeling to reach apex. I find that I replace sleep with stress. It's my life and I've been playing chess. It's prime time now, I gotta leave fake friends. On my journey I'm up on the move, and shorty might cool and she up off the juice. Oh well, I'm working on me, you should work on yourself. Remember my face, but there's somebody else. Now I'm out of the picture, rewrite the scripture. We didn't gel, I feel like I've been there and seen it through hell. I swear that I mean it, I'm done with these girls.
the club, 10:30, 11 o'clock, and it's sort of mellow. The beat's there, the buzz is there, and then the DJ takes you, and he'll have you right in the palm of his hand with the sounds that he's playing, and he'll mix them. And for me, I mean, I'm always like dancing. You know, he'll take you on the rhythm, so your feet are going that way, and then he'll bring something else, and so your hips are going that way, and then the arms come in. And for some reason, it just all comes together. It just all comes together. It just all comes together. The sounds that
Archives on a VHS. Archives on a VHS.
Happy Thursday, guys. All right, how we feeling? Morning. Got Brandon in here. Welcome. Newest syndicate member. We got Harshi in here. Got Maya Hairs over here. What's up, Friso? What's up, Joe? Vaughn? What's up? Edgar. We got Seth in here. Gabriel. ¿Cómo están, chicos? Toda mi gente de Latam. Desde donde se me conectan. Let me know where you guys are coming from today. I know we have a very international community here. Tanya, hello. KJ, Diego, Sen, Patrick. Morning, Amy. Grand Rising. What's up, Greg? Am I on mute? I don't think so. Can you guys hear me? I should be good. Hello. All right, we're cool. And Q. Oh yeah, we're about to get into it. Don't let me get you distracted over here. All right. So let me pull a couple things up here. And let's dive in there. All right, you all should be able to see my screen now. The settings should look a little different, but it should be widescreen. Still tinkering with a few different things here, but yeah, should be a nice full screen for you guys today. Audio's okay? All right, perfect. All right, well, here's what we're getting today, right? Right now, let me double check something real quick. Oh, that looks crazy. Interesting. Yeah, I'm messing around with some settings. I want to make sure that everything looks good on your end. I don't love it this way. All right, here's what we'll do. We'll go more like this. That's fine. I think that'll be better. And then I don't have to be as big. All right, perfect. Okay, so at this point, gonna target and talk about indices right off the rip. Getting a lot of volatility. We're starting to clear some of this liquidity that we had setting up over here. I don't know how many of you took yesterday's NQ trade, whether you able to stay within this, collect some profits. If you rolled it into the new trading day, then you did get to see this, go almost a 3R. If you did not and your trading day ended here-ish, then 1.5-ish. If you got reduced risk, break even, etc., part of the game. But big thing now is we are starting to break below the lows that we had seen going into Monday. All right, Monday's Asian session, London session. So NQ's finally starting to get over here. Whereas Dow is finally recovering New York Open. Yesterday's New York Open. Yesterday, we had a really interesting trading because Dow pumped in its first hour and then just moved sideways the rest of the time. So creating that bullish structure on YM. Right. Dow starting to go, hey, we're here to stay. NQ lagging behind significantly. And S&P finally got to this zone that we had marked up here yesterday. So S&P, we had this sell-off that plays into here before we could see any type of reversals. The market finally gets into the zone today. So what do I want to do here? There's a couple of key things. There's scenarios. So one of the things that works out, at least in my favor, what I consider to be really valuable, is thinking about the best case, not even best case and worst case, just what are the cases? What are the different elements to this? And one of the things that we go over in the syndicate is, right, being prepared, one, being detached, but being prepared for multiple opportunities. So for example, NASDAQ here has been creating liquidity all in this range, right? You have support all over here. And then yesterday, you know, we start seeing this thing kind of create a trend line there. So you have two different elements right there. Then right now we just break below. So we cleared this liquidity. There was retail buying since Asian session to start the week. So that's Asian session, London, New York. That's one entire day. All of Monday, all of Tuesday, all of Wednesday. So we are going into, right, our fourth trading day. So this takes out a considerable amount of liquidity and then is coming right back up. So we're seeing the market start to pull right back in. And this is going with the overall direction of the market. So this is going with the trend. If we kind of eat this back up, so okay, here you can start to see it a little better. But think about it this way. Looks good. All right, great. As quickly as we break below to sweep liquidity, if this comes right back into this area, then we start to see that the move to the downside wasn't to establish a bearish structure. It is to liquidate retail buyers, lure in, incentivize retail sellers. And so if we can get demand over here, then we're looking at a signature shakeout setup. And you guys can learn all about that in the Smart Money Playbook if you don't have that already. So you get something like this, then we're in business. From here, we would look for another entry and then let this thing ride. Bless you. But that's only if we get this demand. If we don't, I won't be as quick to make decisions. So we can see, where does the market start to slow down? Right over here, consolidates, and then we see it start to drop here in the last 20 minutes or so, last 15 minutes or so. So this is really the big push down. So at the moment, not enough information, at least for me, to go in and say, okay, yeah, we're going to go and start looking for buys now. Not quite. We did, push back. We immediately come back in. So just to show you guys, right, we immediately come back up. So we clear below liquidity. So this is where we had the lows, right? These areas. Break below here. Immediately come back up. And as long as we are basically trading above here, maintaining this, and within this range, if we get something like this, doesn't necessarily even need to be up here, but just if we just can trade sideways for a little bit longer, I feel a lot better, especially going into New York Open. I feel more comfortable with buys. And a big thing that we're looking at over here, the reason that I'm not fully convinced that this is distribution, and it could be, right? This could just be like, okay, we're going to just sell off from here, and we're going to work our way down. This is scenario A. The other option is that this just goes bearish, and then we're going to work our way all the way back down to here. And then we eventually, later on, get NASDAQ all-time highs. So it could take a lot longer. It just kind of depends, because we see a huge sell-off right over here before everything turns around. So we may end up coming back down to here. That's totally a possibility. But first, we're dealing with the liquidity that is swept at this point, which is a lot. This is more than enough to lure in sellers, especially now that it broke below. A lot of sellers get pulled into this, and then this thing could rip. So there's really two options. If we're going to have a selling opportunity, here we get a little pump with London during London session, fills an imbalance, and then continues downwards. There's still quite a bit of London session liquidity over here. And well, really Asian session liquidity. So there's a lot of retail all over here with NQ. So there's motive for the market to go higher. That's definitely there. Now let's take a look at Dow. This may give us different context, and we're looking at this at a completely different perspective. So with Dow Jones, Dow is currently working its way to fill New York open. This is where the fun began yesterday. So here, right, this is the market kicking things off. So I wouldn't be surprised if we get back over here. Right now we're playing near. No, we just tapped the previous point of structure, which is right there. We're just respecting this area here. Got pretty close. Grand Rising, what's up, Brian? What's up, Taurus family? So we're looking at something like this, right? So right around this zone. Already rebalanced. The market could just go up from here. So, yeah, taking a look at what the market's doing here. We're getting signs of bullish nature, that demand wasn't too high over here. So, yeah, my first look at this is that we could get the shakeout. The market can pull back here with New York open, and then we just send it and rally. So that's my take. I would suggest having your contracts ready for something like this. This would be maybe like a 30-point stop, give or take 30, 35. So, yeah, I would focus on it, being ready for a trade like that. All right, let's see, pull up here a couple things. Any questions regarding these ideas? Let me know also what other setups are in your line of sight right now outside of indices. You know, what else is it that you may be looking for to make a position here? All right, less than 5 minutes out, folks. All right, so here, let me just get my contracts ready to roll. All right, perfect. Sweet. So, yeah, we pulled the trigger there, and it's game time. So I'm looking at something similar to like right here. We came down, and then for the last 15 minutes, we've just only been trading higher. So, yeah, breaking above these highs would be my first target, pushing towards a 3R. With all that liquidity way up there, I mean, and there's just multiple rounds of liquidity here. Over here, there's a lot, man. There's just a lot of motive. A lot of retail that just built up during London. 3 minutes out from New York open here. All right. big move down right away. Look at that. So instantly came back into here, break and retest type of retail selling, joining the party here. So yeah, I'm definitely gonna look to take a position here in just a second. Taking a look at S&P, and then yeah, look at that Dow a bit more bearish than everything else, pulling into the structure that we talked about here as well. And then yeah, this is now at an entry zone for me. Again, I'm open to it. I'm choosing to take this. Now you all see it there. So you heard it. We're in there. So I actually ended up getting a better entry. And this could break through. If this doesn't want to control demand, then it'll just blast through, and you know, it's an L that we got to take, but it is what it is. See, so I got filled at 59. Okay, now less than a minute away from the open. This now takes out any sort of liquidity that was building up here, if there was any sort of stops in place, and then can run from here. We're already starting to get a decent rejection, nothing crazy at this moment in time. 30 seconds out from New York Open, volatility is going to hit here. And then what you noticed was Dow pulled down to where we had that structure. And Dow's going down and Q is going up. And so to give you the big picture, once again, this was the idea. Now that liquidity was swept here, and the market was creating demand for about 15 minutes or so, my thoughts are that this is luring in tons of sellers, and it's worth taking the risk. Pretty good rejection already. And then perfect. So with that kind of pump, I'm going to go ahead and tighten up my trade so that I can live to trade another day. All right. So here we have all right. So nice move off the rip. We saw the market go a 1.78 R, pulling back, going back and forth right now. Let's see if we're gonna get the rest of this move. Considering that it had that low demand and this thing can rally. Thank you so much. And then from here, worst case, it's a reduced risk trade, very small loss. Best case, this thing can rip, and then we catch a massive move. So I'm ready for it. I'm open to it considering how much we've seen Dow move. So I'm still in this. And then otherwise, then all right, cool. So here I took a very tight, very small L. It was about a quarter of a risk here, and then that's it. So that's it for me. It's a wrap. So tiny trade for a loss, but worth it for me, 100%. A trade like this, if you catch it right, you end up getting within one day, seeing a 35R, not bad. I'll take that all day, every day. Okay, so now that we've seen that, right, we just broke a little bit below. S&P also still, interestingly enough, S&P can still play out of this zone. So take a look at S&P here. S&P can still trade out of this area. If you guys were looking at how this was set up, here was that sell-off with S&P trading near these levels and then ready to roll. So S&P could still mitigate. And that's why I think that we may still get a position with NQ here. Yeah, and now Dow playing out of the imbalance as well. So, one of those today. One of those. So looking at just the overall market, Dow now looks like it's still very much aggressive to the upside. sustaining better bullish structure. Dow also pushed below, came back up here. So as it played into the imbalance and that New York open volatility, here's the 15 seconds so you guys can see a little better. You see the market pump up, down to play into the low, up again. So I wouldn't be surprised if we keep rallying out of this area now that we've rebalanced on the higher time frames here, right? We came back to that structure. We played into where the market was yesterday. And even now, Dow is still more bullish than everything else by a long shot. So let's keep our eyes out on indices in general. Now we're seeing bullish one minute structure, so we're shifting back to the upside here. Can we get a position? So for example, this here took out those lows, and then now we're seeing the market come back up. Can we get another pullback into this range and take a position? And then for those of you looking at everything else, I'm not going for NQ anymore after taking a small loss here. I would prefer to just wait it out. And let's see if we can get a pullback into here again with Dow. Yes, we're basically near all-time highs, but we also have a lot that we can do here. This is a small range, so there is some nice trading that can happen over here. So yeah, if we can build some bullish structure, we may be able to trade back into where we saw this big spike down, this push below the lows, this mega sell-off before the market rallies. So if I'm looking for a position here, it would be within this imbalance over anything else. I know there was I think Harsha, you said you were looking at something with YM, correct? So we're seeing this fly right back down into this imbalance. At this point, yes, it went upwards towards the overall trend. But looking at how price is staying up there, it's not the best confirmation for demand. So like the fact that we just came up here, immediately came back down, typically not a great sign. Not the best of signs for market reversals. It does play out. It's not that it can't, but it's just not happening often. So your probability, your win rate goes down. It's just, that's my point there. So, all right, we played into this imbalance. Like I mentioned, from here, YM is holding and staying within the structure significantly better than we're seeing with NQ. So this still stands. And now we're trading towards... looks like we're kind of trading towards this gap here too. So we had a little, this was a move from before where we had a nice little push down before the market reversed. You can look back to these areas over here. I think you'll see it a little bit better. Right there. That push down into the weekly gap and then the market rallied. Not that you need to take NQ. Could if you want to. But my point is, if NASDAQ wants to play out of this zone here, then that also gives, let's say, Dow Jones a green light to reverse out of, where are we at? Out of this area too. And then you have S&P that's looking to break below Tuesday's New York session, which I would expect it to at this point now. And then that could bring us to this area here, Where here you saw a massive push down. New York session on Monday, clearing London session, and then moving on up. So from here, I think a lot of signs are pointing at the market being able to reject out of this area. Having patience, I think, is going to go a long way here. So indices, I feel like, are going to keep pushing higher. It's just a matter of having the patience for it. Dow may or may not play out of that zone that we're seeing. S&P, a safer bet would be to trade out of this area down here. And then NQ is just about ready to just tagged this zone right there. So multiple confirmations for reversals. The key is, what makes the most sense to you. Follow the setup that has all the confirmations, that meet all of your confirmations. What you don't want to do is trade out of just desire, trade out of impatience, FOMO. So NQ playing out of the zone makes sense, but it's been aggressively more bearish. That's why I was saying, despite Dow not having the most, the best, let's say higher high here, this still may want to play out of this zone. It looks like it actually got a good rejection out of here. So either it does it now, or we see one more wave down, an entirely new structure, and then maybe there's a new position after that. So yeah, that's my take on this so far. All right, let's see here. All right, so here it's starting to build up a little bit more liquidity. Like I mentioned, waiting for the market to give us the structure is going to be, in my opinion, a better take. So let's see. Maybe this pokes below again, and we can see this thing, look completely different. That could be a better idea. Taking a look at S&P almost getting down to this area here, where we saw that massive push down before the market rallied. If this were to give us a reversal, I would project it to happen either somewhere over here, or somewhere over here. These would kind of be the next targets. And what we can do is, it's now like S&P, we want all of this to kind of be in alignment. So as you guys have seen, NQ is trading down where we had the gap fill. Okay. So below everybody else. S&P already has been pretty efficient trading out of here. So this would be where I think we would get the best reversals, would be around this area here. So I would honestly, I think the highest probability, safest play is probably finding your way into S&P at this point. So let's do this. Let's zoom into this zone and see, okay, where can we find a nice play here? So look at how this crashed, honestly, from even lower, from even higher. Started to pull down, started to push here, blew past these levels of support, kept pushing, created one more level, one more support point here, came up again, the last push down, then it went. So honestly, this entire zone is prime for positions. here is the high, I think in my opinion, high probability reversal. And then here in this imbalance is where you'd have the nastiest risk reward. So yeah, I would say this would be the first entry point if we end up working our way down here. And then this imbalance over here would be the second entry point. All right, here we go. So it's getting closer. One thing you could always do is split your risk. So, all right, NQ, getting deeper into this area. Might even go into this imbalance. I'm not prioritizing NASDAQ here. You have S&P already tapping into this range. Great. And then you have Dow, right? Dow just did the good old one more push down here, came back up. So Dow is holding up best structure-wise. Like, it's not even making any lower lows. But this liquidity, I don't love it. So I think I'm going to go with S&P. They're a rare S&P play today. And play out of this range. And then out of here, if this doesn't hold up, then I have, we have trading way down here. But at this point, what I would want to see look at the market here. And tell me in the chat, does the way that the market's holding up here, does this incentivize you? Does this give you the feeling like, oh, let me just, fuck it. Let me just get into a trade here. Like, it just seems like it's not going down below. If at any point you're considering abandoning whatever plan is supposed to work for you most of the time, just ask yourself, how many times are you just going to trade your feelings? Like, how many times? How many times are you going to keep making the same mistake? Oh, it's going to leave without me. How often? How often is it going to be? All right. So with S&P, I'm going to hold off a little bit longer because I want to see Dow clear these lows. This is easy support right here. Easy way to clear out some retail. There's incentive for that to happen, and that would allow S&P 500 to go another notch lower. So if we see something like that, if we get a sweep, then I'm down. And then, I don't know if you guys know, but you can actually, when you're doing split screen, you can make it so they're not in sync. So like you could have one in one time frame, the other in a different one. And then we have NQ. That's sitting in this range here. So, all right. What about you guys? What are you doing? Are you taking the buys on something already? Did you maybe take a position on S&P once it got to the zone? Are you just waiting for more information? What's the decision making here? When you find institutional candles. So yeah, when there's those order blocks, those smart money moves, they're more probable the more liquidity that they sweep. Doesn't need to sweep session highs or lows, but definitely not. But it just adds another like more depth of the liquidity. If you have think about, there's more and more and more opportunities. Like there's more retail money that just got in. So in order for there to be a big reversal, then something needs to cause that.
Yo, what's up, guys?
What's up? Yeah. So that would be that's the difference. You want more liquidity. You want more, because that's going to trigger a bigger move. NQ just cross map tomahawked me. That was crazy. Jer 40. Okay. What are the shakeouts? You know, I can double check. I may not have the shakeout entry even in the smart money playbook, but yeah, there's a V2 version 2 that's in the works. Huh? It has the shakeout model in it. Yeah, I love the extend option for dual screen setups. Really nice when you need to watch correlations and stuff. Yep, totally. Yeah, wait it out. Wait it out. If you feel like you have, for example, NQ definitely could look to go lower than play it. The reason I didn't go for NASDAQ on this situation is because, one, it was just the most bearish already on the day. So the setup is clear. Like, it's liquidity sweep. The push down fills the weak gap. And then, you know, we're just seeing some momentum here now. But we're going against quite a bit of momentum. So it didn't need to necessarily force that. The biggest test to a trader, and that's something that it's more internal than anything, is what's triggering your need to abandon what's supposed to make you money. So, all right, for example, Mondo just said fear. What are you scared of? Like, the real question. What would you be afraid of? That you're not going to, make money today? All right. Let's say that's the case. Let's say that is the reason. Like, oh, well, what if I don't end up getting in the market? What if I don't end up making money today? Well, let me ask you a follow-up question. How long have you not been making money for? What's another day? Let's be real, right? If what you've been doing isn't working, what if you just did what's supposed to work? I'm waiting. My new reset is release the outcome, retain the lesson. Ooh, that's nice. That's nice. Release the outcome, retain the lesson. That's good. I like that. So even now it's like, oh no, S&P has pumped from this zone here, 12 points or so. Tragedy, right? Left without you. Okay. Is there a universe in which this comes back down? Is that possible? Is there a possibility that this could go down one more time and then go up? Yeah. But the funny thing is, when you're not in the market, so here's something that we talk about on our sessions. When you're not in the trade, it's like it's all about what could have been and how you would be up this much. But let's say you would have been in the trade. How many of you would have been quivering with the fact that, oh, I can't even hold this trade anymore? I'm seeing profits. So in theory, the idea theoretically is always what we seem to have hope when it's not involved. Here's what I would have done if I would have been in. Okay, well, why weren't you in? What was getting in the way? Is your entry model too vague? down. You tell me. But it could go back down, right? When you're not in it, it's like this is the last trade that could have ever been. So what happens? The FOMO kicks in. Great. Then the market pulls down, and then if it does get back to your entry or lower, you go, oh, well, I probably won't play down. Now it's going against the momentum. If I'm stressing over a trade, it probably wasn't a good trade to begin with. Exactly. Money. So right now, looks like NQ is what did the thing. So yeah, NQ was the mitigation. And it's funny because this is something that I'm actively looking to. I need to figure this one out. But there are certain moments where with correlated assets, S&P, Dow Jones, NQ, the bias flips. So what I mean by that is, look, NQ over here, this was bleeding out, right? This was on a mission to get down to this level, which we had. This was our entry zone. However, because it was so bearish versus, let's say, Dow here that was not as bearish, then I decided not to take this trade. But of course, as soon as it gets to the mitigation zone, now all of a sudden, NQ is up 100 points, while Dow Jones is still just not doing shit. Like, it's just moving sideways, not doing anything. So in these kind of examples, and I'm just sharing with you, like, there's one piece of the puzzle that is really going to go even beyond. Like, we're already killing it with indices, but to be able to understand when we see the flip in bias and in momentum. So like that NQ was the bear, and then now it gets to a mitigation zone and it's the bull. That doesn't always happen. Actually, it's kind of rare, but it does happen. So when are those the prime examples? How could we know? And I'm not asking you like rhetorically, like, oh, like, because I have the answer. No, I actually don't have the answer to this one. But we will figure out what that case is, because when we can predict or forecast, and then what's the exemption? Because usually I trade the lagger. So whatever gets into the zone last, that's what I'm going to take. But in this case, things are moving so differently. So how do we take a trade like that? When is it valid? So backtesting is, and forward testing and all that good stuff, looking for certain behaviors. That's going to make all the difference. Yeah, filling the gap also lower. Filling this or playing into, the lower level confirmations. Like, this can make a big difference. If this keeps running, then yeah, maybe this could be another version of the reaccumulation. And like I mentioned earlier, one of the key things too is that NQ and S&P hasn't broken all-time highs, while Dow already did. So with examples like this, we're now seeing Dow start to break below. S&P broke beneath Tuesday's New York session, played into Monday's New York session. At this point in time, bless you, I like how we're rejecting this zone. I think that there is a probability that we can look for buys with NQ now or S&P. It's just letting the market really come to us. So yeah, let's see if we can get something here. Because now we see the sweep and the rally. There's clearly very little demand over here. So we could get basically what I was talking about earlier. And you could get something like this. Meanwhile, we have Dow starting to move towards yesterday's New York Open over here. Now, this was that last push down before we got the whole rally. Dow also didn't distribute over here. So I am open to seeing what do we do here when the market gets down to these levels. Because if Dow is good to go, and now it's going to reverse out of here, then more than likely NQ starts to rip and then targets all of this liquidity that we were talking about earlier. So this is basically another version of the shakeout, where it's like if you don't know what a shakeout is or what that trade model looks like, it's basically where there's a liquidity capture, a major liquidity capture, then you basically see retail break and retest. So when sellers would be getting in and it would be in profit, that's where the entry would come. So it would look something like this. Let's see. There was like liquidity here. Shit. So imagine a trade like this. There's a whole bunch of liquidity. The market goes here. Then it breaks below it. So it takes out tons of liquidity. This is where typically people would see, break, retest. Retail traders would enter sells and they would target, just go lower. So it does that. Retail sellers get into profit. And then this is the entry. And then the trade would look something like this. That's basically what we're looking for. All right, let's see here. All right, so we saw NQ finally take out that liquidity over here. Now it's starting to rally. Great. So one of two options. Either this builds a demand over here, we get a pullback, and then we can take a rip here with Dow and ride this into the sunset. Or we break above, confirm bullish structure, and then get the take there. And now we're seeing, we're kind of seeing the difference in price action the last few minutes. The market's been pushing bullish here, last 4 minutes or so, with Dow and Q as well. Obviously started ripping way earlier. All right, let me check the chat. What's good? When's the CPI supposed to go down today? Assuming government coming back, they decided to hold off on the release. So basically, the government decided that they may never release CPI data for what we have right now, what we missed, and that the Reserve would have to make interest rates decisions without it. Because apparently American democracy is hilariously petty. So yeah, that's what we're dealing with now. Okay. So at this point, right, we've been moving, after the market took out the lows here with NQ, we've been moving sideways here for about 10 minutes or so. And now we're reaching the point of, is this enough demand to rally, to take a buy position with the pullback? S&P also pulling back in. What do you guys think? Market swept, came back up. We traded over here for about 10 minutes or so. Now we're in the imbalance. So either this rips from here, NQ, Dow's really only been trading here for a few minutes. So This did do the liquidity capture, playing in there, came back in. So one or the other, you take your pick. NQ has a ton of liquidity. It could be what decides to go bullish first. So, you know, decisions. So I'm going to take a play here. I'm going to go half risk. We saw the sweep. The market then starts to accelerate first with NQ. We get about 10 minutes of demand up here. We pull back in. So this lures in sellers. And from here, let's see if we get a nice little rip from here. Here's perspective on Dow. So you see the sweep below, deeper pullback into this zone. Market comes in. For Dow, it comes up and back down pretty quickly. So it wasn't like too significant. NQ held up a bit longer. So we came up here for a bit longer into this imbalance, and then we worked our way down. And then if you want to take a look at S&P, which I think S&P probably bigger picture here has the better trade, which is right over here, where you could see the buys. Either if you're going to take a position, then okay, cool. Could have half risk entry here now. Could have a half risk entry if it gets to that lower zone. Also a possibility. So there's a handful of different types of trades depending on what you're interested in. So I took half risk on NQ. And then if we do go further down, then I'm open to taking another position on S&P, because overall, like, they're all the same asset class. So if, for example, like, okay, I'm bullish on indices in general, then taking a full risk on each one, it's not like you're really taking 3 different trades. You're really taking the same trade. You know, you're taking the same trade over and over and over again. It's just with different asset. So, yeah, that's my take right now. Looks like Dow getting a nice push up here. So what's been more bullish in current price action, or what's, I guess, struggled to really go lower, it's still holding up pretty well. The way that this took the low, barely came up and came right back down. Not my signature entry. Like, I would have preferred this to stay bullish a little longer, so I didn't just immediately, throw money at this. But I would get why. Either way, indices are pushing higher. We're seeing, Dow starting to push, S&P, NQ. So here is the current trade. All right, so with something like this, the last push down that we saw was like 67 points. So if I get a nice little rip here, a little bit longer, just a couple more points, then then I'm going break even. All right, so good rejection. Seeing that start to push up to here. Fantastic. Either reduce your risk, go break even, whatever your choice is. If you want to take a look at price action in other places for reference, here's where you're at with Dow. Here's where you're at with NQ. Dow still just squeezing, NQ holding up pretty well. So, all right. So on my point here, gonna tighten up. All right. So let's see here. All right, perfect. So right now we're running about 1.37 R. Good work. Dow is still squeezing. So a big breakout. I think we're going to see explosive moves today. NQ hasn't had its like degenerate rally, like absolute just ridiculous push. So I'm going to get a bit more aggressive with my risk reward today, especially now that we've seen some, government shutdown, etc. There's enough fundamentals that could carry this. So if we did pin the low or near the low of the day following, getting into a new hour, etc., then just like you saw, if you look back to here this week, right, we saw Dow go on just a ridiculous tear. So let me give you guys some comparison, some reference points here. When Dow broke above here, so when Dow broke these highs from like early November, then it went on an absolute rampage, right? It just cleared this and then just fully sent the rest of the market. We haven't gotten that yet. The market came back, played out of the weekly open. So when here, this was Dow's weekly open, right over here. It broke into it, below it, rebalanced, and then just went on a tear. Went up like this was, okay, New Year or weekly open, check, go. And Q, weekly open, mitigate. Do we see the same thing? I think it's possible. Unfortunately, for the type of account that I have, and to keep my consistency rule, I actually won't even be able to take this very high, which is a good problem, I guess. Right? Like, all right, oh no, I maxed out for the day. But obviously, that's if this continues to go. It may not do that for all I know. Okay. So Dow still within range. I would expect to keep pushing higher indices overall because there's a lot of liquidity still sitting here. So, for example, think about the market in this perspective. If you're a seller, so let's say you're banking on Dow dropping because it's so damn high, then your stops are above this New York open. Your stops would be above, previous structure. And then if you're just trading the, daily ranges, then your stops are above like London session highs that are like over here. So there's a lot of motive for price to go higher to clear out liquidity. So if the market wanted to sell off and it wanted to sell off big, it would be looking to clear a lot more sellers, in my opinion. And that it's in itself would be a big push higher. So right now we're still not trading above even New York open. Now, if your trading rules are, hey, I'm at a 2R, I think some of you might have just got near it or tapped into it, then take it if that's your rule. If you have more of a variable risk reward where you're trading what the market's presenting you, and which I think you should really only grow into an evolved, like a variable risk, if you actually follow your plan. If you struggle with your exits, like you just always change your mind or do something, then I wouldn't necessarily do that. Just keep it fixed and don't get too crazy with it. Okay. All right, I'm about to be... So I have it just because I have I have these 5 accounts where there's a consistency rule. Like max you can do is like 20 or 25% in a day of like your total. So for example, like if I need to be at 9K to pull a withdrawal, then the most one day can be is 20% of that 9K, which would be 1,800. So for those, for example, like with these Tradefy accounts, that's the like 20% consistency, but that's because these were instant funded. So then I have it set automatically where if my daily profit is 1,800, it'll just pull it. That way I don't got to deal with it. You know, I don't got to worry about it. I don't got to overshoot it all crazy and then have to do even more than I needed to. So yeah, that's where I'm at. And at this point, guys, so look at how much we've broken, you know, how far out we've gotten. If you're sitting at a, you know, over a 2R, well, how much do you want out of this trade? Do you really want to have to deal with an entire pullback, maybe give it all away? Or are you committed to, you know, a good risk reward, like quality risk reward where you're, you know, you're done, you're all set. All right. So I am now done for the day. Cool. On those accounts, I'm set. With others, I still get to hold the trade. So that's cool. But yeah, there we go. There we have it. And then this has taken us to a 2.5 R so far. So what's the consensus here? Watching it now. I have that same zone. Thank you for covering that. That was like 10 minutes. I think so. Good trades. No trades right now. Waiting for ES imbalance. Fill the buy. NYM buys. Nice. Aiming for the liquidity at Tokyo highs. Oh, you're big. Full sender. Yeah, that's a massive trade. Asian highs here. That puts this trade at a 7R. Received your 2R. Beautiful. I'm about to cop an instant funded account with them. Sweet. Great trade. Yeah. If you're going to, remember guys, we do get exclusive code here, so I'll pull this up. They just made a nice little overlay for your boy. So you can use this code. If you're getting an instant funded or a 1-day pass, then it's 30%. Just use the code MAGO. Otherwise, actually it's 40% if you're doing a growth account, which is like the challenges you're used to. So you just use that code, Tradetopia.co, and you guys are good to go. Yeah, these guys, they're hooking us up. And remember, guys, once we are at 20 accounts, then I get to give away accounts. Sick. So I'm excited. I think maybe by tomorrow, we'll be able to do our first giveaway. No, esta ya entré en esta idea, Diego. I should be grateful with my wins, even though it felt like I lost over trading. All right, so let's say you're thinking about the fact that you're like, oh, I think I overtraded here. Describe overtrading. Is overtrading when you take more trades than you're used to, or is overtrading when you are, for example, when there's just not the setups that you should take in the first place? So I think when we can clearly define what that is, then it gets, because sometimes, and it's funny because it's almost a good problem, but you're like, traders get into a mindset where they're like, all right, I'm consistent, I'm gonna do the right things, and then there's a setup. You take it, whatever, you win or you lose, and there's a second one. You take it, you win or lose, it doesn't matter. But now there's a third trade or a fourth trade that's popping up for you. And so here's, I want us to clear this up really quick. So we're going to go full cam for this one. When you're trading a lot in a day, it could be over trading, or it's just a day that is full of opportunities. So most traders, they're not thinking about whether, am I taking the right setups? Is this a disciplined approach? Is there integrity to my plan? No, it's like, oh, let's make money. Right? So most traders, yes, they do overtrade for the purpose of making money, FOMO, variety of reasons. Then you have the trader that's aspiring to be more disciplined, to be more professional, to think long term. And then now there's this fear of trading multiple times because it feels like you're regressing to the identity of the past, to the unprofitable trader that you were, to the undisciplined trader that you were. But there are moments, there are days where you may see 3, 4, 5 different setups that are textbook setups. If it's within your trading window that you've already predetermined, I don't see an issue with it because you don't know the probabilities on when the trades are going to hit or not. I've had days where I'll lose 3 in a row. They were all my setups. I've had days where I'll win 4 in a row and they were all my setups. How can I decide which ones are going to work and which ones aren't? And I think that's where we get in our own way. We get in our own way for a million different reasons, but we get in our own way because we're thinking, oh, let me be the one that decides when these are going to win or not. If you knew when you were going to win and lose, you would be doing significantly better. We all would, but that's not the case. We just know our probabilities, and that's what we have to be able to trade. So just because there is a day full of opportunity or full of setups doesn't mean you're undisciplined just because you're trading more than you're used to. That's my spiel. With that being said, if you're at a point where you've been doing the same things over and over and over and over again, and you're realizing, okay, like I feel like I have the technicals down, but I'm not being able to really dial into this, and you're sick and tired of your behavior, you got to be willing to put more time into what matters. Is why are you acting this way? Where is your focus? Where are your expectations? So that's the number one reason why we've designed the syndicate. Like, it's our program where our whole focus is behavior shift, is getting to the root of why you think the way you do, how we can let go of those things, replace those, and then implement behavior. Like, everywhere else, you're basically seeing a practice of technicals. Like live streaming and trading together, that's cool. That's great. We can make money together. We can lose money together. That's great. You learn the technicals. But none of that matters if you're not able to do the right work. And in the way that we run our program, like you have a different lesson, 3 different lessons every week, and you're doing the work. You're proving it to yourself that it actually functions, or that you're running away from it, because you get to see it either way. Because most programs, you're just watching something and that's it. And hopefully you figured it out. The way we do this, it's like, okay, you learn something, you apply it, you literally fill in the worksheet, and then we give feedback. So at this point in time, you got to stop getting in your own way. All right, guys. So let's go follow up with these ideas. But if that's you, if everything I just said is like exactly who you are, then I'm telling you here, you need to apply to the syndicate and at least figure out, book the call and see if it's a fit. No commitment, but see if it's a fit, see if it works for you. Because I'm going to bet on that it will. And I mean, I don't have to speak for it myself. We have tons of testimonials here. So, hey, Mike. Good morning. How strict are the rules for their funded? It depends on which account you do. So if you're just doing a challenge, it's like pretty chill. The market doesn't close. There's no, you can pass in one day. The end of the trading day is at the end of the trading day. It's not like 45 minutes early. So that's one thing I do like about Top Step. And I like Top Step. I have Top Step. So I'm cool with Top Step. I like Tradefy. I like funding ticks. I just partnered with Tradefy specifically because they had more options. It was more flexible. You have no activation accounts. You have, so you just buy it once and that's it, no fee. You have the typical one where you pay for it for like the 50K is like $48. And then you have the activation fee, which is actually less than Top Steps. But yeah, it's pretty flexible. Everything is really chill. The only one that is more restrictive is the instant funding one, and it's just the consistency rule. That's it. But that's just if you go straight to getting funded and you skip the combines and all the challenges and all that good stuff. What's up, Bavik? What's good, my G? What's up? Talk to me, bro. I miss you, man. All right, so thankfully, took some gains out of this one. So we saw a peak just under 3R. The market's currently filling in balance. In regards to stop loss management, all right, my trade right now is sitting at, is sitting above. So I hit on all my Tradetopia instance, those are done. So I hit my max on the day. But for my other accounts, I have my stops currently at right here. So if it were to play into the structure and then run, I'm cooked. But that's kind of the nice thing about having, I guess, multiple accounts with certain different like approaches. You're able to have different types of outcomes as well. I still think there's a lot of incentive for price to break these highs. So right now we saw play a rejection off of New York Open, which was this push up here. S&P did something similar, trading actually above it. And, interestingly enough, if you go back to S&P here, this sell-off was pretty huge. So it was just a big move, about 40 points. Has this reversed 40 points already? Not quite. Interesting. I wonder if it does. It seems like S&P has a little more that it should get to, minimum. So I think we still go further. All right, let me pull something up here real quick. So let me give you guys a recap on the government shutdown real quick, because I know I think that to me that's really important, because things happen behind the scenes all the time. Whenever there's big news happening, remember there's what's being put in front of you. There's that information. There's the there's what they want you to know and where they want your attention to go. And then there's just reality. There's what's also happening that they don't want you to think about too much. So what just happened, right? Shutdown was for 43 days, the longest in U.S. government shutdown in history. The funding bill passed the House and was signed by Trump yesterday. That reopened federal agencies and they restored pay to their workers. This is just a short-term funding. So this could shut down again, right? Short-term funding resolution keeps the market open up until like late January. And then they're going to fight again over the long-term budget. So the shutdown is over, but we're not like totally out of the woods. They got to renegotiate. Now, what did it cost the U.S. government? Basically, as of 4 weeks into the shutdown, the CBO estimated that the GDP was already about 18 billion below where it would have been otherwise. So based on that, 4 weeks is 18 billion, probably around like 27, 28 billion that was lost in quarter four. And probably like lost forever for the most part. Now, cool. That is interesting. But what is more interesting, and I think this is what affects us more, is that we had, right, CPI, PCE, GDP, retail sales, all of these are delayed. And then CPI, the same thing happened in 2013. And some of these you just never got the information. So COT reports were also not shared. And so we will get a data dump, but some of that will be missing, allegedly, based on what they're saying. So I think volatility days are definitely coming here for the next foreseeable future. the other element to this is how that influences the Federal Reserve, how that influences interest rates, and how these are going to be basically structured out. So since the Fed doesn't have this data, allegedly, then it's going to put more weight on surveys and like private indicators. So I think rate cuts are going to happen, and there's more uncertainty in the air. So when there's more uncertainty in the air, that means that there's more volatility. All right, so here, I'm looking at my notes here. What else did I want to add? I mean, I think that basically covers it. Indices wise, we will. So when is the NFP? We'll be seeing a lot of these things dump. So I wonder if this is actually already updated. So let's look at the month here. All right. So from now, as of right now, we don't have anything here for tomorrow. Monday, CAD CPI, and then we get unemployment claims on Thursday, FOMC meeting minutes. This meeting minutes might actually be high impact. This isn't interest rates. This isn't the press conference. But since we're now in a different place, and this would be the committee speaking, could be something worth noting. I wouldn't be surprised if we end up seeing some of this data that we didn't get thrown in here, just scattered across here soon. They just said October jobs will come out next week without the unemployment rate. Okay. $50-year mortgages and 25-year car loans. I saw 15-year car loans being shared. I did not see 25. That's crazy. Yeah. So what's the issue, guys? What's the issue with having a 50-year mortgage? It's just your interest. You're going to pay 3 times the house, basically. By 50 years in, if you drop 300, let's say you buy a house for like $350K, you're going to end up paying damn near $1 million for that house after 50 years. The only people that a 50-year mortgage is like valuable for is if you plan on paying it, accelerate that significantly, and you're banking on your income to skyrocket. Like, that's really the only reason. It's like, all right, my income's going to skyrocket. I'm building my business. I can get a good interest rate. So let me just lock in a good interest rate. And then I'm going to pay heavily up front and run it that way. That was really the only way. The car, I don't know. The car one, that's just buy it, dude. Buy a car in cash and use or something. That's just not it. I don't know about all that. Financing a car for that much, it's like already a depreciating asset, and then to finance it for 15 years or 25 years or whatever, like that, you're cooked, dude. 400K loan that from years 30 to 50 ended up being around 400. No, I did the math too. My number, I saw higher numbers, but either way, it's like, yeah. Housing market is interesting. I mean, if you get interest rates back down again, as we're seeing, I think it's not a terrible play, but you got to know what you want. That's the biggest thing. Like, you just have to know what you want, and not making decisions out of desperation or out of what you've been taught to believe. Like, run the numbers. It's that simple. Run the numbers. Run what life you want to have, and then what's the cost. That's really the case. So, yeah. All right. So, I mean, all I did was look at indices today. Let me do just a hyper speed run through everything else, and then we'll call it a day. So dollar is absolutely getting crushed. So you're seeing a lot of these things go up. So we had Swiss franc just flying here. If you just saw it earlier, no trades there for me. We have Australian that ripped to the upside and actually just played out of this pump right there. And then now things are turning around. So we see a sweep of liquidity, played up to here, dropped right back down. If we stay bearish, we might be seeing a reversal on Australian here. So there is potential for sells here in the future, but not enough price action yet for me to decide. So yeah, you have that there. And then the setups that look pretty good are actually, where is this thing? NZD. So NZD shorts played out really nicely. And then the longs rejected out of here. So if you guys, anyone took buys on this, I'm sure you're feeling yourself right now. You're walking a little different. Got some extra pep in your step today. This was mitigating at this time. So you had, I don't know exactly what this was caused by. But now, if the market keeps trading up here, you could have another buy scenario. So here we saw that push down. So this at some point could be a play. Let's see if we can sustain price action up here in order to get buys for 6N. So we have that. Let's write it out. All right, today's setups. So 6N, NZD. Still waiting for bullish demand to confirm the uptrend and the buy setup. Okay, so we got that. All right, so these other ones I ended up partialing for the rest of them. Oh, look at that YM dumping. All right, so let me shift my focus here real quick. Remember the original ideas, right? How we wanted S&P, potential S&P buys from this lower zone. I think we still have a shot at that. And then Dow is playing out of yesterday's New York Open now. Not necessarily a trade I take. Like, yes, it's an order block before a massive imbalance. So there's definitely, like, I don't have enough data with this type of trade. It's just the order block, but it's a strong one. New York Open, last sell-off before it ripped. And yeah, here's the proof. So let's say if I was in this, I would move my stop to my entry. Yeah, right now. Okay. Cool. Who is this one for? Oh, Brandon? Sick. All right, well, here's a workbook for you guys. If you haven't seen, we have the Breaking the Habit of Breaking Your Plan, the workbook here, which we're running a 6-week implementation program with this. So, yeah, this one's, hey, Brandon, this one's yours. Sick. Let me, get your signature. Now you can sell this one for more later. I got you. If you haven't checked it out, check it out. And then that comes included if you're doing the 6-week program too. All right, so look at that. You got the bounce, so play it out of the order block, and now it's going lower. Perfect. NQ already rejected this zone as well, so the next stop for NQ, I mean, all the way down here. Yeah, I'm staying put with this. I'm not looking to take anything with Dow. I'm chilling here. NQ, I mean, where's this thing at? Yeah, the next stop really would be just actually completely filling this over here, down here. As you're noticing, though, look at the shift in momentum. Dow is pushing lower. Finally, Dow is starting to clear some of yesterday. Not even clearing, not this past London session, but starting to get into London session and Asian session from the last from Tuesday. So I would love to see more liquidity captured going over here. This just took out, New York open buys. So anyone that was in buys here that had their stops, they just got cleared out. How does this relate to, like, for example, S&P? S&P, in my opinion, still hasn't fully mitigated, so a buy does make sense out of this, but I would prefer a little bit lower. And then just to give you one more take, NQ is still making higher lows. It still hasn't broken below. So the shift in momentum is like there's less bearishness with NQ over everything else. Now from here, we just had that alert on the pound. So the pound here is now clearing liquidity, trading out and upwards towards here. I don't have a sell over here. I just wanted to see where liquidity was. So if we were to look into here, now that it took out these highs, I mean, there's a little 30-minute move, but it's like not a massive, it doesn't like sweep anything. It's just a push up. So to me, it's not significant enough to look for shorts for the pound. I like this zone up here a bit better. Trading out of October 29th. So if you look back at other assets, this October 29th, like Euro is getting closer to this area as well. CAD futures is way further away from this. So this October 29th zone is a good one. That was the beginning of some pretty big reversals across the board. So I'll go ahead and add this for CAD futures too. Let me get the image for you guys, make your life easy. Eventually, Euro will get back here. This may take a while. Okay. A setup that's happening a little differently. It may happen at the same time. It goes back to the yen. So the yen on Tuesday had a very, very significant pump here. Market started to rip before collapsing. This here is a significant selling event. Right over here. This entire zone is a massive move. If you were to zoom in some more, we kind of slow things down over here. Stalls out, comes back in, and then you get one more move higher. You can kind of see it happen right there. So it comes into play pumps up, crashes back down. So could be something worth, let's say having an entry way up here is definitely possible, considering it kind of stalls out and then you get one last push before it goes. So looking for like a refined entry, I could understand why you would want to look for a sell pretty high in this zone. But yeah, yen looks pretty clean, especially because we got lower lows and the market traded down here for about a day and a half below the structure. That's a good solid structure in my opinion. So if you wanted to go for it way up here, be my guest. If you wanted to wait a little bit or to take an entry lower, I totally understand that. I do think it clears this though, at least clears these highs. So something like this makes sense for yen sells. 6J. If you're trading CFDs, then this is USD JPY. And that chart's going to be basically flipped. So it'll look like the exact opposite of this, inverted. Same JPY, nice. Oil inventories are pushed back today because of Veterans Day yesterday. Makes sense. All right, cool. So, all right, that covers the yen. Where was the pound? And depending on the timing of this, there's two things with the pound. The sell idea up here. So possible shorts up in this range. And then the buy scenario over here as well. Right now, pound is ripping. So if you look at how it pushed down here, this was super clean. Nice little push down. And then the continuation. This rejected this last sell-off too before it ran. So we saw it push down, cleared out Friday's London session low, played into Thursday's New York session, came back in. So you have the best of both worlds here, buys and sells. Now it's a matter of time. So we'll go back to this here in a second. Let me just add this to the list. 6B. Okay. And now we can look at S&P. So S&P now further down in the zone. We're seeing Dow almost clearing liquidity here from London session, which it hadn't done yet. So clearing London. And then Asian session lows are sitting over here as well. I'll actually just, here's the low here. All right, so here you have all right, so this is a target. London cleared. S&P at those lows. Okay. At this point, I don't see why it wouldn't target Asian lows as well. They're pretty close by. So let's say you were interested in longs here. Makes sense. Now you have NQ that's about to finish filling the gap here, which would be filling it right there. And then, yeah, so pulling the trigger here would be, in my opinion, I think what looks clearest would be looking to take that S&P buy. That's kind of somewhere in between all of these. But I'm going to wait a little bit longer I want to see YM clear liquidity. That's my take. You don't have to take that by any means. But yeah, that's my final. This is using all of the tools in the tool belt here. Gap rebalancing, which it's basically there right now. We have Dow, I don't know, super close to taking out the liquidity that it didn't take out yesterday. It had left this pending here. So this is, I don't know, what, 40 points away. Probably goes a little bit under that anyways. So I want to see that. Yeah, appreciate you, Vaughn, for sharing. It's in there. Mm-hmm. Fantastic. So we're getting there. Meanwhile, that's happening. You have, let's see, silver was on a mission earlier. All-time highs, check. Possible distribution. Maybe. If we stay below here, yeah, we could be looking for something there. Gold as well. Took out the highs. Mitigated yesterday here. All right, NQ's filling the gap there. Now. Our NQ gap fill. Check. Right there. It's right there. Done. All right. Very nice. Okay. YM. Just about getting there. This needs 20 more points. Okay. So, yeah, gold did mitigate already here from the past. There was a big bullish candle before it continued dropping. So that already did its thing. Gold slower on the way up for sure. So shorts with gold, in my opinion, make way more sense. And here was that last move up before everything collapsed. So shorts out of here with gold are a possibility. All right. Here's where we have the support too. So this is looking more and more like it could be ready here soon. All right. Then that brings us to oil. What's oil looking like over here? Huge sell-off out of here. Drop below all of this for a quick... I mean, it traded below this for 17 hours. So we had New York session close over here, Asian session close over here, and then London picked things back up. I'd rather not buy. It's close enough to argue here. I think I'd stick this one out. You have the last pump up here before everything drops. So shorts at some point probably look a little bit better. All right, where are we at here? Dow, just do your thing, bro. We don't got time for all this. Okay, that takes care of that. Mexican peso still flying. Crypto, not really bleeding, but not really doing too great. No, pretty decent drop today. Back to this zone. So Bitcoin also now at what you could consider a mitigation point. Massive sweep, market rallied. Now we're sitting in the imbalance here. This rejected this zone once within this structure. Now it's deep here. What's ETH looking like? ETH already breaking below it. All right, nice. ETH clearing liquidity. Excellent. I don't think I'd take anything here, though. Still 20 points away from clearing these lows. And then last thing here that I'll bring up is just a little quick stocks update. Webull still dropping. Lucid. Snap lost a lot of the gains, or some of the gains you'd make. All right, YM now clearing this. Perfect. Asian low swept. And that puts us at extremes here with S&P. So if you're looking for a setup, I'd have this pretty open. A little like wider, but I mean looks good. So S&P. Take a little trade guy here. Light stops a bit open. And see if this holds. Now, I took just a little dabble, because you might have NQ just wanting to still keep bleeding out. So if that's the case, then S&P could also just keep pushing lower. And then now that Asian lows have been swept here, I guess the majority of the reversal would probably be coming from now that liquidity can be captured. This can push forward. But yeah, anyways. Go from there. Call it a day, folks. Sweet. Well, guys, awesome. Looks like we had a lot of people here. If you're here for the first time ever, make sure you're enjoying the community that we have as well. Let me make sure I post this here. That way you guys can have the setups that we have in here too. And if you're not in here already, then join the party. It's these communities. This community is free here on the left. Just good chat, good resources in there. And then, of course, like I mentioned earlier, if you're just so dialed in on the technicals and you're just keep ignoring the behavioral changes you need to make, then book a call. See if it's the right fit for you. The spots right now, typically we don't take more than 5 people a month, just to make sure we can, have quality control there. So appreciate you guys. And yeah, I'll catch you on the next one. Peace out, y'all.
There's something missing. I guess it's love. Love is missing. Love makes everything easier, at least for me.
I just wanna feel like I'm enough.